Kate, I want to bring up the chart. This is the Ibbotson you and I were weaned on. This is log. This happens to be Dow, not SPX. But the answer is it goes from the lower left to the upper right. And yet we're all wringing our hands. How bull market is this bull market right now?
I think there's a ton of angst right now, which is what you're capturing here, Tom. But, you know, I look back at this time last year, in mid-2017, there was a ton of angst as well. There, everyone was stressed about valuations. They were worried about the sustainability of the rally. They weren't as convinced on the economic side. I mean, I feel like it takes a lot to get confidence back into the market these days.
Here's a zoom in on a chart right now. This is the Dow, and there's the long-term trend line in green. And all you got to know, folks, we're off the mean, but we're not that far off, Kate, compared to 2000. I mean, it's not 2000-y, is it?
No, it's not at all. And I think the really important part here is what's causing the deterioration in sentiment is not actual data, either on the macro side or on the earnings side. This is really about exogenous risk, about geopolitics, about trade, and about policy, things we can't control. And understandably, it's caused this equity risk premium to rise a little bit. But you know, that doesn't necessarily mean it's going to be sustainable. And from my view, you know, we shouldn't be backing away from our equity allocation at this point.
Good morning, Kate, from London. But overall, how much does it actually hurt sentiment? So I don't know whether you're basically talking about animal spirits, right?
Yes.
How much does animal spirits take a beating, and how do you translate that into the real economy?
Yeah, Francine, that's a good question. I mean, it's sometimes difficult to quantify this. And one of the ways we might look at it is fund flows, or how people have been, you know, investing their money, equities versus bonds versus money market. Another way we might look at it is the rotation within the market, trying to really figure out how bad has sentiment gotten. And we haven't seen either a wholesale selling of equities or a massive change in leadership within the equity market that suggests there's been a lot of capitulation. A tremendous number of headlines, you know, a lot of, as Tom was suggesting, hand-wringing and concern, but we haven't actually gotten to a point of mass fear. I think we're at a wait and watch stage, especially as we go into second quarter earnings and as we get hopefully a little bit more information around trade over the next 30 to 60 days.